given the price action that played out on Monday morning, what was going on with the yen, what was going on with Japanese equities and global equities more broadly, would have been remiss not to at least have an emergency cut as a potential. But now we've stabilized. And as we've stabilized, the bar has increased for the Fed to consider cutting rates before the 18th of September.
I came in this morning, and this is the glory days of 20 years ago. It's how I got my job. I used to construct fancy charts. Okay, I did log VIX. That's its own story. It's away from Ian Lyngen. But I did log inflation-adjusted 10-year real yield, the real yield. So I had a higher real yield as far back as July, 2.00%, 2.02. We gloriously come in. Then we have Japan. We come in even further. Where's a normal real yield right now? I think even global Wall Street doesn't know what to do here at a 1.80. Is that elevated still?
I would say that that's still elevated, and the Fed would argue that's still restrictive. But the reality is we don't need to go back to zero in terms of real rates.
Where do we need to go to get an efficacy for the overall financial system?
I think that our estimate's somewhere in the 50 to 75 basis point range.
Under 1%?
Under 1%.
You got to be kidding me. That's un-American. No wonder they're Canadian shocked. That's why. Are you kidding me?
No, I think that that's actually a reasonable level to assume for real rates over the next 10 years.
So you're modeling out a 6% nominal GDP. If we get a pop down to 0.50 positive 10-year inflation-adjusted yield, you're goosing. You got to be goosing out to 6% nominal unless you get global disinflation, right?
And what's to assume that we won't find ourselves in a disinflationary environment globally?
Agreed.
And I think that that's what we're running up against. And that's what, to a large extent, the Fed is trying to avoid. And that's why they're being as proactive.
I mentioned this, Paul, 3 times this week. Last week, single sentence that mattered. Wei-Li BlackRock. She's modeling China at a 3% run rate.
Yep.
Nobody, even Ian Lyngen. Lisa Mateo's ready for that, but not Ian Lyngen.
Ian, when the Fed starts cutting rates, let's assume it's September, how do they proceed from there? Is it every 25 basis points every meeting, every other meeting? Do they keep it open maybe at 50 points at some point? How does that work usually?
Well, we're certainly in a atypical environment insofar as the Fed is not responding to a crisis, at least not yet.
Okay.
All they're doing is going from restrictive to less restrictive. So they're not easing in the traditional sense. And so that will afford them the opportunity to deliver quarterly rate cuts if they deem necessary. So 25 basis points a quarter is our base case scenario.
Okay.
Depending on what the next couple weeks gives us in terms of data, we might actually pencil in another 25 for November.